Florida, the land of eternal sunshine, booming migration, and record-breaking home prices. But beneath the palm trees and pastel rooftops, something is cracking. Insurance rates are exploding, migration has slowed, and sellers are quietly panicking. From the Panhandle to the Keys, cities once seen as untouchable are starting to buckle under the weight of overgrowth, overpricing, and overwhelming risk. Tonight, we count down 10 Florida cities where the next wave of the housing collapse is already forming. Cities where paradise is starting to cost too much to keep. So grab your seat, because by the end of this video, you'll see just how quickly sunshine can turn to shadow.
Number 10. Jupiter. At number 10, Jupiter, the glittering gem of Palm Beach County, where wealth once felt immune to market gravity. But in 2025, even luxury is learning that no market can defy reality forever. This coastal enclave, home to CEOs, athletes, and hedge fund elites, saw its real estate values skyrocket between 2020 and 2022. Million-dollar listings were gone in days, and builders couldn't keep up with demand. But the tide has turned. Median home prices have slipped nearly 11% year over year, and the number of multi-million-dollar homes on the market has tripled. The culprit? Costs. Insurance premiums that once averaged $8,000 a year are now topping $20,000 or more, even for homes well inland. Add HOA dues, mandatory flood coverage, and county taxes, and many luxury homeowners are paying over $3,000 a month just for insurance and maintenance. The once endless stream of northern transplants from New York, New Jersey, and Connecticut has slowed dramatically. Higher interest rates, climbing carrying costs, and inflation have frozen even the wealthy. Cash buyers, once the lifeblood of Jupiter's market, are now bargain hunters. Realtors quietly admit that showings end in silence. Ocean view condos sit dark. Entire gated communities, once humming with construction, now echo with the sound of stalled sales. Even Jupiter's rental market is cooling. Rents are flat, and high-end investors are struggling to fill short-term luxury properties. Jupiter once sold exclusivity. Now, exclusivity has turned into isolation. The city's luxury mystique is fading, replaced by anxiety. Beneath the blue skies and million-dollar views, Jupiter's shine is dimming, and for the first time, the wealthy are wondering if they've overpaid for paradise.
Number 9. Pensacola. Up in the Panhandle, Pensacola is facing a storm it can't outrun, not from the Gulf, but from the economy. This once underrated coastal gem became one of Florida's biggest surprises during the pandemic. Prices soared more than 65% between 2020 and 2022 as remote workers and retirees flooded in, drawn by affordability and calm beaches. For a time, Pensacola was the dream: low cost, high reward. But 2025 tells a very different story. Home prices have fallen nearly 14% since mid-2024, and that decline shows no sign of slowing. Rising insurance premiums are the main culprit. After multiple costly storm seasons, insurers have redrawn risk zones and raised rates aggressively. Many homeowners now pay double or even triple their previous premiums. Hurricane flood maps have expanded inland, pulling thousands of homes into newly designated risk areas. That means higher costs, mandatory insurance, and less lending. In some neighborhoods, particularly near Perdido Key and Bayou Texar, it's now cheaper to rent than to own. Local contractors report canceled building permits and frozen development projects. Investors who rushed in to flip homes are exiting fast, listing properties below purchase price just to escape. And younger families, once the bloodline of the area's workforce, are quietly moving north, across the state line to Alabama, where insurance is cheaper and wages stretch further. Even tourism-linked rentals are struggling. Airbnb hosts report vacancy rates near record highs, and property managers say coastal inventory is sitting unsold for months. Pensacola's beaches still sparkle in the sun, but beneath the postcard perfection lies a housing market losing its footing. The tide that lifted it so high is now pulling back fast, and it may take years before the city finds solid ground again.
Number 8. The Villages. At number 8, The Villages, America's most famous retirement paradise, is learning that even the good life comes with limits. For decades, this sprawling, golf cart-filled community symbolized carefree living. Thousands of retirees poured in every year, chasing year-round sunshine and a sense of belonging. Home values climbed steadily, bolstered by endless demand and the promise of stability. But in 2025, that formula has cracked. The Villages is now facing what experts are calling a retirement market correction. Prices have flattened, inventory has spiked, and affordability, even for retirees, has collapsed. Property taxes have climbed 30% in 3 years. HOA fees are soaring past $600 a month, and insurance costs have doubled for many residents. For retirees living on fixed incomes, these increases are devastating. Homes that once sold within a week now sit on the market for months. Listings that boasted active adult luxury now quietly lower their prices. Even resale units, once the Village's strongest segment, are slowing, as the next generation of retirees opts for cheaper southern states like Georgia, Tennessee, or the Carolinas. And then there's maintenance. Aging infrastructure and the cost of maintaining dozens of golf courses, pools, and clubhouses are catching up. Residents report new assessments and rising community fees. Forums and local message boards are filled with complaints about costs, crowding, and declining resale values. Developers are still expanding, but demand isn't keeping pace. Entire new sections sit partially built, waiting for buyers who may never come. For years, the Villages symbolized the triumph of optimism, a community that kept growing no matter what. But in 2025, that optimism is fading. The golf carts still roll, the sunshine still glows, but the buyers, they're slowing down. The Village's golden years may be giving way to a long, gray correction. Proof that even paradise ages eventually. Number 7. Northport. At number 7, Northport, the fastest-growing city of the last decade, is learning that expansion without balance leads to collapse. Once marketed as Florida's affordable frontier, Northport became the symbol of post-pandemic migration. Families and retirees flooded in, drawn by cheap land, open space, and the promise of a quieter life within reach of Sarasota's beaches. Between 2020 and 2022, developers couldn't build fast enough. Entire subdivisions rose from the ground, lined with "Coming Soon" banners and glossy billboards promising luxury living from the 300s. But in 2025, the dream has hit a wall. Inventory has surged over 80%, and median home prices have fallen more than 12% year over year. What was once a seller's paradise has become a buyer's waiting game. The cause isn't just oversupply, it's financial strain. Insurance rates have tripled for many homeowners. HOA fees that once felt manageable now eat hundreds per month, while property taxes creep higher with every reassessment. Construction costs, once fueled by cheap materials and labor, have exploded. Local builders are cutting staff. Realtors say open houses go hours without a single visitor. Homeowners who bought at the peak are underwater, unable to sell without taking losses. Even more troubling, migration into Northport is slowing. With wages lagging and costs rising, younger families are choosing smaller towns inland or leaving the state entirely. The city that was supposed to symbolize opportunity is now flooded with uncertainty. Northport's problem is structural. Too many homes, too few qualified buyers, and too much optimism built on temporary demand.
The result is a slow-motion correction. The city once hailed as the future of Florida growth may soon become its most powerful warning, that when you build too fast, the market always catches up.
Number 6. Punta Gorda. At number 6, Punta Gorda, the charming waterfront city nestled between Sarasota and Fort Myers, is starting to feel the pressure of paradise's price. For years, Punta Gorda was the secret of the smart retiree. Peaceful, picturesque, and affordable compared to its flashier neighbors. Its canals and coastal views promised serenity, and for a while it delivered. But by 2025, the cracks are widening. The city's pandemic-era boom was driven almost entirely by retirees and cash-rich second home buyers. When mortgage rates soared and insurance markets imploded, the foundation gave way. Waterfront insurance that once cost $3,500 now exceeds $10,000 annually, and that's if you can find coverage at all. Many homeowners have been pushed onto the state's FAIR plan, which carries steep premiums and limited protection. New flood zone maps have redrawn risk boundaries, pushing previously safe homes into high-risk categories. Condo owners are now facing special assessments after new state inspection laws, some exceeding $50,000 per unit. Developers, who once couldn't build fast enough, are now quietly offering steep discounts, $50,000, $100,000, sometimes more, just to keep inventory moving. Crane sides that once dotted the skyline are standing still. Behind Punta Gorda's postcard beauty, financial tension is growing. Restaurants are seeing fewer seasonal visitors, rental demand is cooling, and luxury listings are piling up. The retirees who once called this city a forever home are now reconsidering, some moving back north, others simply cashing out before values drop further. The canals still gleam at sunset, but beneath the reflection is unease. Punta Gorda's calm may not be comfort, it may be the silence before the storm.
Number 5. Winter Haven. At number 5, Winter Haven, the inland heart of Polk County, is proof that even distance from the coast can't protect you from Florida's housing reckoning. Once known as the City of 100 Lakes, Winter Haven became one of Central Florida's hottest real estate stories. As prices exploded in Tampa and Orlando, thousands of buyers turned inland, chasing cheaper homes and quieter neighborhoods. For a while it worked. New communities sprouted up around the lakes, and developers couldn't pour concrete fast enough. Between 2019 and 2022, home prices surged over 60%, and investors rushed in, snapping up homes to rent on Airbnb or flip for quick profits. But by 2025, the market has turned cold. Inventory has doubled, price cuts are everywhere, and homes that once sold in days now linger for months. Sellers are trimming 10 to 15% off listing prices just to attract traffic. Many recent buyers who stretched to afford record-high mortgages are now watching values fall and wondering if they should walk away. Insurance and tax bills have shattered the affordable Florida myth. Inland homeowners who thought they'd escaped the coastal crisis are now facing premium hikes of 50% or more as insurers expand flood and storm coverage requirements. Property taxes, too, have climbed, driven by inflated pandemic-era assessments. Local Airbnbs report occupancy down nearly 25%, and nightly rates are being slashed. Landlords are converting short-term units to long-term rentals, flooding the market and pushing down returns. Infrastructure hasn't kept up either. Roads are congested, schools are overcrowded, and amenities lag behind population growth. Winter Haven's story is a reminder that Florida's housing crisis isn't just coastal, it's statewide. When affordability dies, so does demand. And when demand fades, the fall begins.
Number 4. Naples. At number 4, Naples, Florida's crown jewel of luxury, is starting to lose its luster. And what's happening here could redefine the meaning of safe money. For decades, Naples symbolized wealth without worry. Its pristine beaches, art galleries, and waterfront mansions were a magnet for America's elite. The mantra was simple: Naples real estate never goes down.
But in 2025, that illusion is shattering. Prices for high-end properties have fallen 15%, and listings for multi-million-dollar estates are up more than 60% compared to last year. Homes that once sold off-market with bidding wars now linger for months without an offer. Realtors report that luxury open houses, once social events filled with champagne and brokers, now echo with silence. Insurance costs have become unthinkable. Annual premiums for waterfront homes have exploded past $20,000, even for properties with hurricane-resistant upgrades. Add in six-figure HOA fees for coastal condos and new flood zone designations, and even the ultra-wealthy are feeling pressure. But the problem isn't just financial, it's psychological. Naples built its identity on invincibility, on the idea that wealth insulated you from downturns. Yet now, wealthy homeowners are asking tough questions. Why stay when Florida's costs rival California's? Why invest when maintenance alone eats into returns? International investors from Europe and Canada, once the backbone of Naples' luxury market, have pulled back. Rising global interest rates, a strong US dollar, and fears over climate risk have cooled foreign buying. Developers, meanwhile, are slashing prices on unsold projects. Even the rental market, once a safety net for seasonal owners, is weakening. Rents for luxury beachfront condos are down 10 to 15% as snowbirds rethink extended stays. The glittering paradise is flickering, not from lack of beauty, but from the weight of its own opulence. Naples isn't collapsing overnight, it's quietly deflating one unsold mansion at a time.
Number 3. St. Petersburg. At number 3, St. Petersburg, the jewel of the Gulf Coast, is facing its most serious housing correction in a decade. This city, once celebrated for its balance of culture and affordability, has turned into a cautionary tale for overconfident urban developers. Between 2020 and 2022, St. Pete's skyline transformed. Luxury condos, boutique hotels, and sleek waterfront towers rose faster than demand. But in 2025, that demand has frozen. Downtown condo vacancies are up 30%, and resale prices in older buildings have plunged. Under Florida's post-Surfside structural laws, many condo associations are being forced to complete multi-million-dollar repairs, costing residents tens of thousands each. Faced with special assessments, longtime owners are rushing to sell, flooding the market all at once. The result? A cascade of price reductions, especially in high-rise units near the waterfront. Homes that sold for $900,000 in 2022 are now struggling to fetch $750,000. And single-family homes, once protected from urban volatility, are softening too. Insurance and taxes are eroding affordability across the board. Premiums have doubled in just 3 years, and new flood zone updates have pushed thousands of properties into mandatory coverage. Meanwhile, property taxes, linked to inflated pandemic-era valuations, are strangling retirees and small investors alike. Migration, St. Pete's secret weapon, has slowed to a crawl. Northeastern and Midwest transplants, once arriving by the thousands, are staying put as housing, insurance, and utility costs make Florida less appealing. Even local business growth has cooled, with commercial vacancies rising downtown. Realtors have coined a new phrase for what's happening: the Bay Bubble. It's the mix of speculation, overconfidence, and climate risk colliding in real time. St. Petersburg's charm hasn't faded, but its market has lost its magic. The sunsets are still breathtaking, yet behind those golden skies lies a city trying to figure out what happens when paradise runs out of room to grow.
Number 2. Port St. Lucie. At number 2, Port St. Lucie, the poster child of pandemic migration, is now facing the painful hangover of overexpansion. This mid-sized city exploded between 2020 and 2022, attracting remote workers, investors, and retirees who couldn't afford the coasts. Prices surged nearly 80%, and developers raced to meet what looked like infinite demand. But in 2025, the boom has turned to bloat. Home sales have collapsed. Inventory has surged by 90%, and price reductions dominate the MLS. In some new subdivisions, homes are selling for less than their 2022 construction cost. Builders are offering unheard-of incentives, $30,000 design credits, mortgage rate buydowns, even free solar panels, just to keep projects alive. The city's infrastructure, once a selling point, has buckled under pressure. Traffic congestion, school overcrowding, and delayed road expansions have soured the suburban dream. Residents who move for peace and value are now trapped in long commutes and rising bills. Meanwhile, insurance rates have soared across St. Lucie County. Policies that cost $2,800 a year in 2020 are now exceeding $6,500. Many homeowners are choosing to go uninsured, a dangerous gamble in hurricane country. Investors are bailing too. The short-term rental market is oversaturated, and long-term rents are falling. Airbnb listings have nearly doubled since 2023, flooding the supply and undercutting profitability. The result is a city caught between growth and gridlock, a place that sold the dream of affordable coastal living but delivered rising taxes, higher costs, and crumbling affordability. Port St. Lucie's future depends on recovery, but right now, it looks like a textbook example of what happens when boomtown optimism meets economic reality.
Number 1. Fort Lauderdale. And at number 1, Fort Lauderdale, the shining symbol of South Florida luxury, is facing a reckoning that could reshape the entire region. Once the playground of yachts, beachfront penthouses, and foreign billionaires, Fort Lauderdale is now feeling the crush of insurance chaos, rising seas, and financial fatigue. Condo values have fallen 12%, but that number hides the real story. Some coastal units have lost 25% of their appraised value due to new flood risk data and mandatory repair assessments. Insurance costs are out of control. Premiums topping $25,000 a year are now common, forcing owners to sell at steep discounts. Developers, once flush with foreign cash, are freezing projects mid-construction. Pre-sale towers that were sold out in 2022 are quietly reopening units for relisting, often at lower prices. The investor frenzy that once drove this city's skyline has evaporated. Even the luxury waterfront market is cracking. Million-dollar mansions along Las Olas and intracoastal canals are trading hands below assessed value. Some owners are selling just to escape the relentless cycle of maintenance, flood preparation, and taxation. The rental market, too, is buckling. Corporate relocations have slowed, and remote work has cut into short-term rental demand. High-rise vacancies are rising, and landlords are slashing rates. But perhaps the biggest shadow looming over Fort Lauderdale is environmental: chronic flooding. Sunny day floods are becoming a weekly event in low-lying neighborhoods. Streets that once hosted luxury cars now fill with salt water at high tide. The city that symbolized coastal success is now living on borrowed time and rising water. Fort Lauderdale's fall isn't sudden, it's steady, visible, and unstoppable. Once a city that defined Florida's dream, it now defines its warning. The higher the skyline, the harder the fall.
From Jupiter to Fort Lauderdale, from the villages to Naples, Florida's markets are feeling what comes after the boom: correction, contraction, and collapse. The same forces that made Florida a real estate gold rush, migration, speculation, and insurance avoidance, are now reversing. The question isn't if these markets fall, it's how far. This is Discover the Nation. If you care about America's housing future, hit subscribe, because the next story of collapse might already be breaking in your backyard.